What does it mean to invest capital? Each franc you earn is yours to spend however you want. Toss aside? Or maybe make it up? Yes, you will have to pay some or all of your monthly bills, like rent, food, and insurance, with your money. You should also set aside a certain amount each month for savings. The chapter tells you more about how to save money for short-term goals like vacations or a new car, for your education, or even for unplanned expenses. What is the most I can spend? Look at the budget. But you can get more for your money if you invest money you don't need for daily expenses or short-term goals. Most of the time, high risk means high return. When you invest your money in something, you want it to grow. This is called coming back. To get this return, you can invest in stocks, bonds, funds, or other securities. In the chapter, Securities, How to Invest Your Money in the Stock Market, we talk about the different ways you can put your money to work. To start, we'd like to tell you about the basics of investing. Investors want a higher return on their money than they can get from their savings accounts. Why? There is a good chance that your money will be returned to your savings account. This is where the risk comes in. With your deposit, you're only taking a small chance. When making something, there are different types of risk, and the type of risk determines the potential return. So, when making something, the 4 rules below should be followed. The risk goes up as the return on investment, or ROI, goes up, and vice versa. Our video about the magic triangle shows how the 2 goals of return and security are at odds with each other. We can lower the risk of our investments by spreading them out over many different types of investments, places, industries, etc. Funds, for example, put your money into different stocks, bonds, and money markets. So, the growth of a company or industry doesn't have much of an effect on the return or the risk. If you only want to invest your money for a short time, you shouldn't take on much or any risk. Assuming you're willing to take on more risk, a longer investment horizon lets you take on more risk. This is because even if bad things happen in the short term, the investment's value can go back up. The faster you can get your money, the lower the expected return is usually. When money is put away for a longer time, the expected return is higher. Ask yourself these questions before you put money into something. If you are a beginner investor, you should ask yourself the following questions, preferably with the help of your client advisor, before you invest your money. How much can I put into an investment? Small amounts can be used to invest regularly. You must be sure, though, that you won't need this money anytime soon. How much is the most I can put in? A look at the budget will help you figure out how much money you have left over for investments. Question 2. When will I need the money again? You can invest with different goals and time frames in mind, such as short, medium, or long-term goals. How long you plan to keep the securities will directly affect which ones you choose. How risky am I willing to get? Your financial situation is used to figure out how much risk you can handle. Your relationship manager will ask about your current financial obligations, your plans for the future, your annual income, your savings, and your personal and professional situation. So, your risk capacity is a measure of how much you need the money you have invested. So, you'll be more willing to take risks if you already have savings that you won't need for day-to-day living shortly. But if you have kids who need to be cared for, your risk tolerance might go down as your extra money goes down. How dangerous do I want things to be? Your level of risk tolerance is affected by how you think and feel about opportunities and risks. In contrast to how risk-taking can be judged objectively, your personality and attitude have a big impact on how likely you are to take risks. So, your willingness to take risks goes up if you're willing to take more risks for a bigger payoff. On the other hand, you'll be less willing to take risks if you only want to take a small risk and pass up a bigger reward. What is the best mix of plants for me? Which equipment is best for you and your needs will depend on how much risk you can or want to take, as described in questions 3 and 4, and how long you can invest. So, a profile of an investor is made. Then, you can choose the best investment vehicles for you based on this. For example, investors with a short time frame are more likely to think about bonds. People who are more cautious and have more time to invest can put more money into stocks. To make the portfolio even more diverse, different investment products are often put together. Don't forget to subscribe to our channel.